Nick Hansen. Balls of steel, how are you?
Balls of steel? What do you
Balls of
mean?
steel.
What do you mean by that?
You're a ballsy guy, man.
That is true. I've been Bitcoin mining since 2018. It's been a rough ride. But yeah, we're here.
Who's your friend?
So this is my friend,
buddy.
my friend and the head of Luxor of derivatives at Luxor, Matthew Williams.
I've been told to talk very softly.
I've heard you're the shit.
I am the shit. No, I'm kidding.
Mr.
No.
Hansen here has been like, you just wait. You won't have to say anything. You're going to learn all about derivatives.
Yeah, because that's what everyone wants to learn about is derivatives.
Honestly, I woke up this morning. I was like, Danny, you know what? You know what I need today?
We need some derivatives in
We
our
need
life.
some. By the way, we've been drinking some gin since about 11. I need some hash rate derivatives.
Yeah,
It's on my mind.
yeah.
I've been on my mind for a long time.
Well, I'm your man then. I woke up this morning and I was like, how do I make derivatives sexy? Every time I go on a podcast, I'm trying to do that. I haven't done it yet, but today's the day.
Is your Twitter handle the king of derivatives?
Yeah.
Yeah.
No, it's close.
It's worse
You
than
also
that.
speak Russian.
It's much worse than that.
What is it?
It's called Trading Onions.
Trading onions.
Yeah, there's a whole backstory to Trading Onions.
Tell me.
Let's go. I want to know.
I wanna
You
hear
never
this.
told me either.
Well, it's common knowledge. You can look it up. But back in the 50s, you used to be able to trade onion futures.
Okay.
And there was a couple of brothers that cornered the onion market and just basically drove it through the roof and made millions of dollars, just kind of like squeezing people out of their onion positions. And so the regulators are like, all right, that's it. No more trading onions. And to this day, since I think 1955, you can't trade onions anymore.
Sounds like that trading places.
Yeah.
Orange
It's like
futures.
orange juice. Yeah, it's
Yeah,
true.
orange
Yeah,
futures.
same thing.
So we're fully exposed on our onion prices.
Yeah.
We have there's no way to reduce our volatility.
You
on
always
onion
want to be long
prices.
onions.
Okay.
Otherwise, you'll cry.
Yeah. Yeah.
Bob.
Don't go short onions.
How you been, man?
So the last time I was here, I
Here?
wore a suit.
We're in LA. Yeah, you did.
Yeah, I did. I wore a suit, and people made fun of me. They said it's a
that in-
cheap suit.
Was that in LA?
That
It was here, yeah.
Yeah, we had
you,
Emma with us.
You didn't
Yeah.
want to be the SBF.
I didn't want to be the SBF. I'm like, all right, we're going to clean this up a little bit. We're going to try to look a little more like a business guy. And so I wore the suit and the jacket, and people were like, oh, this guy's it's just a guy in a cheap suit talking about this stuff. And I have to admit, it was a cheap suit. I'm not a suit guy. I'm not a suit person. But yeah, so back to normal. But I am wearing the first shirt that I ever wore on this podcast when you put me on in 2021
In the white room.
in the white room.
It was like, in the Matrix where they go in and they get all the guns and it was like that room.
It was like that room, and it was actually also in LA. And Bitcoin was at
Stop it.
3,000, and we were at 40 something. Well, so now we use petahash to measure the value of hash rate because it's gone down so much. It was at $450 a petahash around that time, and we were wondering. We made a bet whether it would go over $1. Over 1,000 per petahash, and I lost.
I made that bet.
Yeah,
Hold on. I made that bet. I wouldn't have known what I was betting on.
What was the bet?
You had
How
no
much was
idea.
the bet?
But it felt very degenerate on your side because you had no idea what you were betting on. You're like, sure, let's bet.
Classic
But I
dude.
now owe you a million sats.
Is that true?
I owe you 1,000,000 sats. Yeah,
You owe me 1,000,000 sats. Danny owes me 500,000 sats.
$500,000 sats. Okay, wow.
Danny is brilliant at ping pong.
Okay,
It's one of my few skills.
Genuinely brilliant. We played in Austin the first time. We turned up this
we were
ping
there
pong
for a
table.
month.
Yeah, we were there for a month. We were playing every day. Kick my ass every single day.
But did you get better?
Yeah, but he also got better. And also he's tall, so he can smash it. He's got like this advantage.
hang on.
And every time we book a place now, we're like, we told you we used to look for a table.
Yes,
A ping pong table.
Ping pong table.
table. Okay.
That's a swing. That's a kicker for us now. Anyway, there's a ping pong table. We turned up and he's so ballsy. He's like, if I bet you, what was it? Was it 1,000,000 sats?
500,000.
500,000 sats, you won't beat me. He's like, I bet you 500,000 sats, you wouldn't even win a game off me, let alone a match.
Wow.
I won the first fucking game.
I was
you go.
rusty. I was rusty.
Do you know it's Danny's birthday?
Is it really?
It is.
No,
Happy
it's not
birthday,
mine.
Danny.
Happy birthday, Danny.
Happy birthday.
Pete's been winding me up about this. We went out for dinner last night, and he told the waiter, and they came over with a cake and candles, and everyone was singing.
Not just candles, those like ones that are
Stream
on fire.
sparklers. Yeah.
And,
Like the bottle service people.
Yeah, and everyone sung him happy birthday.
And then
It's
today at
amazing.
Pack Bitcoin, everyone came and said, "Oh, happy birthday!"
Yeah.
It's such a
I honestly thought it was your birthday. And then Peter was like, it's not his actual birthday.
It's
awesome.
so fucking juvenile, but
Yeah.
I don't care. Oh, so I won a bet. I don't know the bet. Okay.
Yeah, we made a bet of whether hash price would ever get over over 1,000.
Where did it get to?
$1,000. I don't think it ever got over 5,500.
No.
Oh, so I crushed that bet.
Oh yeah, you crushed it.
Okay.
But I was just being,
I haven't even collected my debt.
that is true.
Have you got it on your phone? Do you want to pay now? Do you want to pay me in stats?
Do I have to pay you with Lightning?
I don't care. Whatever.
Okay. I'll pay you. I'll pay you.
You should have not. You could have not paid. I owe you big thanks. Firstly, thank you. You're a sponsor of my football team,
That is true.
which is going very well.
It has.
And our football team, outside of a good manager and hard work, and the team and Emma, who you know, and she's amazing. It needs three things. It needs people to come to the game, Bitcoiners to buy merch, and sponsors. And we need all three, or it just doesn't work. The economics don't work. And you sponsored us last year, and I asked you to come and do it again this year, and you've done it. And we've been able to carry on. We're third in the league. If we win our games in hand, we'll go top. And our ladies are also top of the league and won every game. So I owe you a huge debt of gratitude. You are part of the Bedford story. And thank you, man.
On the way to Premier League,
Premier
right?
League, yeah.
That's what you said. It's going to take a decade, but we'll get there.
I said 10 years, 9 promotions in 10 years. I said we'd miss it 1 year.
Okay. I mean, it is bold, but I like it.
We'll see. Football league, I take football. But thank you, man. Like, it means so much. Can't do it without sponsors. So I appreciate you. And you'll always be a hero of Bedford.
Hero of Bedford.
Hero of Bedford. So we're in a bear market. It's, I say particularly brutal, but they all feel brutal.
I mean, this one is statistically longer so far, and it doesn't really seem like it's going to get there any faster. It doesn't seem like we're going to go. There's no real bullish catalyst. Maybe the ETF.
Definitely ETF.
I mean,
ETF's
BlackRock
bullish.
would be a game changer.
Oh,
Yeah.
yeah. That's a question of when, not if.
Yes. And there's some rumors about
Like
that.
April.
Is that what you've heard?
Yeah.
Well, my question about it really is how do you pick the first one? Because you're picking a winner, and that's like bullshit. I
I
think
think it'll be multiple at once.
I think they're going to give them all at once.
Yep. Agreed.
Off to the races.
Okay.
In April.
Yeah. You think April?
That's what I think.
With the halving?
Yeah.
Are we going to have the halving?
I don't think they're smart enough to equate the two. I think it's just dumb luck, but I think that's what's going to happen.
If there's a halving and a BlackRock ETF and all the others at the same time, we're all getting girlfriends.
It's like Christmas comes early.
Our
Christmas
girlfriends
in
might get
April.
girlfriends.
Yeah.
It's going to be an interesting April, regardless.
Well, the mining industry kind of needs it.
Yeah.
So you talked about early on. You were like, "What's derivatives?" I've been waking up thinking I needed derivatives.
Do we have to really get into that yet?
I mean, I was
having fun.
I was gonna say.
You're saying this isn't fun? I just told you I was going to make it
There's
sexy.
a lot of miners today that don't exist anymore that probably wished they had Matt and his wonderful suite of products to actually make it through some of this stuff.
They're
Okay.
actually your
And what-
products. I just made them.
That's a good point. That is a good point.
How many miners have we lost in the last year?
Ooh. I'm not going to name names, but
Any significant ones?
well, I mean, Celsius Mining actually was pretty large. Like they had tens of thousands of machines and are, I think, no longer. Corsair, of course, went bankrupt, but it sounds like they're going to probably emerge. There was a big
hosters.
default that NYDIG ended up holding that I don't want to. Yeah, there's
No, look, if you want to say it, we're not going to censor you.
well, I'm just saying, I mean, that happened. So Iris defaulted on a big note to NYDIG. And so that's another, effectively a default of a subsidiary company, kind of is like a hold co. It's not my area of expertise. There's been quite a few that have gone under, and certainly the economics are as bad as they've ever been. That's without a doubt.
Yeah, I mean, it's not all just because they weren't hedged. I mean, the truth is, like, they weren't hedged in a lot of different areas, right? We already talked earlier about, poor power deals, not hedging their treasury, not hedging, hash price, through revenue, but a lot of them was just kind of got caught in the fervor of the bull market and making bad deals. So it's just a confluence of bad decisions.
Right. Okay. I mean, the mining business is ultra competitive. We have the ASIC manufacturers who love to flood the market with ASICs and never seem to have a consistent pricing. They just get as much money as they can and get as many machines into the market as possible. I think are they the only true winners in this market?
So
It's got a high beta to Bitcoin, right?
yeah, high beta to Bitcoin and the mine, like they specifically they change their pricing every day based on ROI. They have like an internal model for what they think ROIs of these machines will be, based on a bunch of different parameters, and then they change pricing based on that. So that's why pricing does seem to be sort of out of nowhere, but there is an internal model, and it's based on ROIs, not based on cost to produce the machines. Like the cost to produce a machine is, I think, in on the order of like a couple $100, if that.
So they crush.
Yeah.
The margins are high, but there is a ton of R&D. Chip development is expensive. They do crush, but there's, them and stable coins also seem to do pretty well.
Well, it's also a good model too, right? Because everyone's incentivized to have the most efficient machine. So it's just like it's like the iPhone, right? Like every year you come out with something a little bit better and everybody wants it. So it's
slightly different. I can survive without the next iPhone, and it doesn't mean like if I don't have the latest iPhone, it doesn't mean I like walk a bit slower.
No, but it's true. But I mean,
You've
there's
got the
some
latest
people.
iPhone. You've got the second latest iPhone.
Is it? Which one is it? Yeah, but I don't have the new one.
Nick's fact checking. But
You've got the second latest iPhone.
People are still mining with S9s, right? That's the iPhone 5.
Mm-hmm. That's the iPhone 5.
Yeah.
Yeah.
I mean, barely. So if you had an S9 running at 3 cents, you make maybe like 10 cents a day. But you deploy enough of those, and
yeah. But I mean, the manufacturers make money by making new machines and incentivizing people to buy them.
But still, as a miner, you kind of have to have the latest machines to be, especially if you're a public miner, to compete, right?
I wouldn't say you have to.
It depends on what your energy costs.
Yeah, Bitfarms has a really interesting strategy right now where they're really focused on the IRR of their investment into machines. So they don't have the most performant fleet, meaning they don't have the best efficiency. So their efficiency is quite a bit higher. They have poor efficiency relative to the rest of the market, and we say their efficiency is higher, so it's they're probably somewhere in the 30 joules per terahash range, where the most recent S21 that just came out was in the 16 to 17 joules per terahash range. But they are also buying machines that they think they can ROI much more quickly, and thus basically make a return on their investment, as opposed to thinking exclusively about the joules per terahash and like long-term value prop of the investment they're making. So that's part of their strategy. That's like included in a lot of their like public marketing and stuff like that.
They have a lot of cheap energy too, right? They focus on renewables and.
Yeah, they focus on areas outside of the U.S. So they've been brave enough to deploy into places like Argentina and Paraguay, which have significantly lower cost of energy here. But also, Argentina, you have potentially issues with rule of law.
Kinda, yeah.
They can. I mean, yeah. It's a very real possibility in Argentina that somebody comes and nationalizes your site, where probably not. I mean, there's almost a 0% chance that happens in Texas.
Yeah, I think the bigger risk in Argentina right now is if Javier Milei wins the election, which he's looking like he will. I mean, he won the primary, he had 30% of the vote. I think he will form a coalition and he will win. I mean, his policies are pretty clear. He's going to dollarize the country. He's going to get rid of their central bank. And if he dollarizes their country, he's going to end subsidies on energy. Energy prices are going to go up in Argentina.
He's running on ending the central bank. There's a difference in actually doing it.
Yeah, but he is a pure libertarian. And if he dollarizes the country, they won't need a central bank. What's the role of the central bank? He wants small government. But they have massive energy subsidies in that country. And
you think that goes away?
Well, look, when you dollarize a country, what you do is you hyperinflate away the currency, because I wouldn't know any reason for anyone holding Argentinian peso right now. But if he wins the election, the next day, that currency is pretty much dead. Because if you dollarize, you're saying this currency is over. They went through the same in El Salvador. What was the currency called? The Quilo or something? I can't remember.
I don't know.
But that's what happens. And I think it's what the country needs. I absolutely think they need it, but it's going to be devastating for the poorest people in that country, because they're the ones who are in the peso economy. They can't get into the dollar economy. The middle upper class are in the dollar economy. They hold US equities, or they hold Bitcoin or stable coins, or they've got dollars buried in a garden or in a safe. All the poorest people haven't, and they're the ones surviving on the subsidies and the handouts of the peso. And so once that's gone, they're going to have to adapt to a dollar economy, and everything's going to get super expensive overnight. And my assumption, that means energy is going to get more expensive.
Right.
That's my assumption. But I don't actually know. Paraguay's interesting. These guys just gave me a sticker today. Penguin. Yeah, they're in Paraguay.
Good buddies of Luxor.
Yeah, they're in Paraguay.
Paraguay, yeah.
All I know about Paraguay is they have massive hydro dams, right?
Well, they have two really big ones, but the one everybody talks about is called the Ayatapu, and it's the one between Brazil and Paraguay. And right now, they sell almost all of that back to Brazil.
Right.
For, I don't know, something like a cent. So if miners come in and say, we'll pay you 3 cents, that's kind of how they started. That's kind of how Bitcoin mining started in Eastern Washington. We were selling, I live in Washington. They were selling all that energy back to California at like a cent. Gigawatt came in and said, we'll buy it for 3 and we'll buy all of it. And the locals were like, what? Okay, that sounds awesome.
Thank you.
Yeah, and then I guess, of course they overbuilt and then ended up going BK and all that stuff because they ran out of cash. But
yeah,
that's a story for another I guess
podcast.
I don't know, but for another podcast. It's a pretty brief story. They overextended themselves, went BK. Okay. A tale as old as time for Bitcoin miners, unfortunately.
And the only other thing I know about Paraguay is they have the most interesting goalkeeper in the history of football.
Why?
This guy called Chilavert. Look him up. Look up Chilavert.
Danny, can you get that? Can you look that up, Danny?
No, trust me on this. This is wild. When I tell you the interesting thing about this guy, he's a goalkeeper, played for the country as well. How many goals did he score in his career?
As a goalkeeper?
Yeah, 46 goals. So 617 appearances, 46 goals. He scored 8 goals for his country. Bear in mind, most goalkeepers never score in their entire career. They might have like 1.
So what's the reason?
He took the penalties.
Okay.
But he also took free kicks. So go to YouTube. You just got to see this guy. So it's fucking mad. Also, weirdly, he follows me on Twitter.
Does he?
Yeah.
So
go on YouTube and
This is a
search
long
up for
time ago.
Chilavert free kick. So he would go up and take the free kicks. And if he scored, he would obviously celebrate. If he didn't, he'd have to run back into his goal. Here he is. But he's a goalkeeper. It's just, I think it's just the most insane thing that a goalkeeper scored essentially 1 in every 11 games. It's just insane. Yeah.
I made his mark.
Yeah. Sorry, I deviated. I'm a football guy.
I know. You love it, man.
Everything comes back to football. I don't even know where we were. What were we talking about?
We were talking about
Paraguay.
Oh, yeah, Paraguay. No, before that. So,
Bit farms.
but it seems like the model or the market for miners or mining, it's so ultra competitive that everyone's constantly finding a new edge.
Yes.
What is their edge now? What is their edge?
That's anything.
Of course, but it's such an ultra competitive industry. There's so much pressure on these companies. Companies that look like they're worth billions of dollars or hundreds of millions, and then suddenly they disappear because of one mistake, one power contract, or
Yeah,
what is pressure?
It's interesting though, but like I think it's only relevant because it's such a nascent industry. Like
Right.
if you look at this in oil and gas or agriculture or metals or whatever, like same shit happens all the time, right? Like
I don't know. You tell me.
Oh, it does for sure. Like everything's ultra competitive. Everything's like, how do you lower your operational costs and how do you increase cash flow and how do you get revenue certainty? And it's all a game of competition, right? And so I think it's just more interesting here because we're living it, because this is the space we're in.
What is it these companies should have done differently? Why should they have had you on the phone, Matt?
Well, it's interesting because, to be honest, even 2 years ago, there wasn't a whole lot of hedging tools for miners, specifically around their revenue. If they want to talk about their treasury, there was Bitcoin derivatives, and there's tons of those. Energy, same thing, like energy contracts, every derivative, futures, ETFs, swaps, forwards, you name it, existed for 100 years. But they just weren't. I think it's twofold. One, you were caught in, like a sporadic bull run mentality, and no one wants to hedge during a bull run. And you probably shouldn't be, but you need to hedge for the future. And then the other thing is, like, I don't think a lot of these people, no offense to the industry, but I think a lot of people didn't come from, mature business backgrounds, and they just kind of had to learn on the fly. Like it was a lot of people that were interested in the technology and kind of built businesses around it, but didn't have hedging backgrounds or didn't have how to manage an operational business background. And I think it's just evolving over time as it naturally would.
So you're basically saying it's such a new industry. These new players have essentially tried to establish what the industry is, but people with a more traditional background in other industries, they would have bought hedging strategies with them, and they've just not had this. But It's happening now. I know it's happening now, right?
Yeah, no, it's definitely happening now. People are getting smarter, and I think they had to, right? The last 18 months were brutal. And you know, if you don't learn your lessons and adapt, you're going to be one of the people that we talk about in the future that's no longer around. And so if you want to remain solvent, you got to get more mature in how you operate a business. And I mean, honestly, like it's the same thing happens in, like I said, in oil and gas and agriculture. And in a previous career, we used to talk to farmers about the same thing, like how they should be hedging. And farmers are just like miners. Like they always think their crop is worth more than it really is and don't want to hedge and view it as gambling. And a lot of it's just educational efforts. Like you have to educate people on the benefits of hedging because it's not sexy. It's just the cost of doing business.
Is it like insurance? Like some people go on holiday.
Yeah.
They should have insurance, but they don't bother because it's like, it's a couple $100, I'll be fine. And they get out there and they break their leg and end up in the hospital. And it costs them a fortune and it fucks them. Is it similar? Like,
it's very similar. Like at a broad level, yeah, hedging is insurance for sure. Like you're not going to make more money hedging, but you're gonna wake up and still have a business.
it's good socialism.
Sure. I'm not going to get a Marty Bent curveball thrown at me, like get out, abolish the Fed or anything like that.
No, not
Okay.
yet.
Okay, cool.
I'm from Europe. Me and Marty see the world differently, but I love Marty.
That actually happened to me.
It did.
Yes.
I was about to say we need the backstory. There is that on Matt's first big podcast.
It was I think it was my first podcast in this space.
Yeah, went on TFTC and talked about some derivatives, and then at the end,
It was great. I mean, Marty was great, and I could see like a smirk coming on his face, and I'd been warned. And sure enough, you know, he's like point blank with a deadpan was like, "So you think we should have abolished the Fed?" And I was like, "Well, I didn't really say anything like that."
Did it lead to that?
No, it was out of the blue. He was trying to trip me up.
We had the Fed guy in here yesterday. Do you know the Fed guy on Twitter?
Joseph Wang.
Yeah. So I asked
How'd
him.
that go?
Good. I mean, it's
Yeah.
great. It's teaching us all about the Fed. And I said to him, "Do you think we should get rid of the Fed?" And he was like, "Absolutely fucking not."
No.
Like he's just like, "Are you what you on about?"
Well, he worked there. Of course, he's going to say that.
No, look, you can see both arguments. You can see what the Fed does and how it influences markets and how it makes certain people like picks winners and losers, and it's usually the poorest who lose the most.
Yeah.
You know, riches the cantillionaires, but also at the same time, he's like, you don't want these banks going to the wall because of a liquidity crisis.
No.
And so, I mean, I'm not going to take a position.
Well, I
don't
mean,
know
the
enough.
truth is, and what I told Marty is, it doesn't matter what I think or what Marty thinks is not happening. So
That's a different point. Yeah.
yes,
Yeah, that's a different point. I mean, it can happen in places like Argentina because they get rid of their sovereign currency, and
yeah,
the Fed is their central bank at that point. But
yeah. I don't know. I mean, who knows if the U.S. continues on the path it's at? Wouldn't rule anything out.
yeah, we'll have a curveball for you at the end.
I appreciate that.
So these, so if you had a new mining client who came in, who, you know, they're doing a good job, they've got great access to power, good price, good data centers, they're doing everything right, but they're not hedging. Do you have like a whole suite of things you bring to them? What is it?
We're working on building that suite, but yeah, like we're trying. It's not a one size fits all. And actually, to that point you just made, like if they have all those things you said in a healthy balance sheet, like I would actually advise them to hedge less than other people. You know, hedging isn't. You don't hedge 100% of your production, and everyone's got a different operating expense ratio, and you just kind of like have to take it on a case by case basis. But the metrics that you just told me, yeah, I mean, you have to think about, you know, what's their objective, both in the short term and long term, and we're trying to build that suite. But right now, we effectively have 2 different products. I would say by the end of the year, that might be 4, but it's a goal to have something different for each use case, and for that example, you know, we have, I don't know if you want me to go into a product detail.
Yeah, definitely.
I'll do the quick sales pitch here.
I'm a miner.
You're a miner.
Okay, everything's going well.
Everything's going well for you.
I think I've got nothing to worry about. My balance sheet's okay.
Okay, your
What-
balance sheet's okay, and you're probably looking to raise some capital so you expand your fleet, right?
Yeah.
Going into halving, you're trying to get more production out, and
Yeah, a little bit worried about the halving.
yeah, and now the banks are saying, or whoever you're trying to get capital from, saying, sure, we'll give you capital, maybe, but because you're in good position, but it's going to be 15 to 18%,
Exactly.
and you're like, that's not great, or you're like, well, we can release, you know, some equity, but now it's going to be dilutive. And you're like, no, I don't want to do any of that. You come to us and you say, hey, you know, we say, look, you can hedge out your revenue And in this scenario, let's say you want to hedge out 10 or 30 or 60% of your revenue, and you do it over time. Now you can show, what your cash flows are on a consistent basis. It's predictable. You go back to those financiers and you say, look, I have predictable cash flow. And they're like, all right, great. Well, we'll give you what we give to metal producers. We'll give you 7%, and we'll do it, with collateralized on your ASICs. And now you're off you go. And that's one scenario. Another scenario is we also are about to release an instrument where we can provide you Bitcoin up front and in the basis that you sell your hash rate forward.
Okay, hold on. Let's go back a step. The previous one. Okay. So in that scenario, you're saying the more reliable balance sheet.
Well, yeah, look at
cash flow forecast, more reliable cash flow for the business, therefore. And how far ahead am I hedging that? Is that like a year?
Well, let's look at it from a financier's perspective, right? Like they're in the business of certainty, right? They're going to give you money based off of how predictable your cash flow is, like what your revenue, what they think your revenue is going to be in the future. And 6 months, 12 months, 36 months, like they want to look at that kind of, projection. So you're not going to go to them and show like 1 month of revenue. You're going to show several months. And so, and they're going to get more comfortable with it because they're in the business of making money on predictability. And that's how you get lower interest rates on your financing.
But how do you guarantee that for me?
Well, because now, all right, so now you're a miner, right? Yeah. And let's say you have, I don't know, how many petahash do you have in your fleet?
100.
100, yeah.
Okay, you got 100 petahash, right? And in this scenario, let's say you use my instrument or Nick's instrument and you sell 60%. So now you're selling 60 petahash. You're hedging 60 petahash. So for 60% of your fleet, 60 to 70%, now you have revenue certainty. The other 30% you can let ride. You want to participate in the upside, great. But that 60% over time, and let's say you do a 6-month or 12-month contract, now you can go to the financiers and say, look, I know exactly that I'm going to make at least this much. And then there's 30% upside on the balance. And that's, now they have certainty and they can have something to model their projections on what your cash flow.
But how are you guaranteeing me that 60%?
Oh, you want to know the mechanics?
Yeah.
Okay. So we have an instrument called a hash price forward. And it's in technical terms, in TradFi, it's called a non-deliverable forward. And basically what that means, it's a cash settled instrument. It's based off of Luxor's hash price index. So everything revolves around the concept of hash price. You want me to go into details on hash price? Okay. So there's two different ways you can look at hash price. There's USD denominated hash price, and then there's BTC denominated hash price. Basically what hash price is it's the expected value of 1 petahash of hash rate. So if you have 1 petahash, right now you're going to get roughly $62.01 for 1 petahash per day. Mm-hmm. So that's what your expected revenue is for that. And it basically takes into account Bitcoin price, difficulty, transaction fees, and the block reward, right? So it's a methodology. We have an index that basically calculates that value in a 15-second interval. And the instrument that we have, it's just like let's say the S&P 500 or the Bitcoin futures. They're all based off an index. So you build derivatives around an index. That's like the underlying value of a derivative, right? So have I gotten sexy yet?
Yeah. Can you take it to like 1 year, Danny?
Yep.
It's not good.
No.
Yeah.
The further out you go, the worse it gets.
There's a great spike in there, and we can we can tell a story about that spike. This is where it gets really interesting. So that's roughly like May 8th, right? So that's the BRC20 ordinal spike. So basically, everyone's competing for Go ahead.
If you're on audio, it was $127 per petahash per day.
Well, and it went from where? If
we were at
80, 60, 75?
Yeah, 75.
Nearly doubled.
Yeah,
almost doubled. Yeah.
Yeah. So the block reward went from 6.25 to 12.5 overnight.
Yes, from transaction fee.
From transaction fees alone. So it was a 75. At one point, it was a 75% jump just from transaction fees. Now, where it gets interesting from a derivatives perspective.
Can I just ask a really quick question on that? Was that when you mined a block with a single transaction in it?
No, that was quite a bit before that. That was actually back in March. But this was sustained volume from hundreds, if not millions, of transactions by people all over the world.
Thanks, Udi.
Shout out Udi.
So there were some smart people during this period on both sides of this. There were some people that kind of speculated this was coming and went long hash price via our instrument and did well. And then there were some people that if you look at the chart shows, for people listening, a very depressed hash price over a good amount of time. And there's a lot of miners that are like, we don't want to hedge at these levels because we're basically locking in unprofitability. But there was a couple of smart people during that spike that were like, I'm going to take advantage of this. It's frothy. There's some people that are thinking these transaction fees are going to stay this way for a long time. But some people locked in that hash price at those prices and we're doing great. Now, granted, it was only for like 3 months, but if you can lock in plus 100, hash price for that long, you're way ahead of the game.
But who's paying for that? Who's taking the downside?
It was
the buyer.
somebody that thought transaction fees would stay high. They were the buyer. They were thinking, oh, this is actually going to, these transaction fees are going to sustain or increase, and I'm going to, end up making money from this.
Well, and the truth is, it's hard to pinpoint like who wins or loses in that because people buy and sell and buy and sell. It's not like one person bought and lost money.
So is there a marketplace for this then?
For what?
Like, how does this work? Like, if somebody comes to you and says, I want to lock in this price.
Yeah. So we operate what's called an OTC market. So it's over the counter, right? It's not on an exchange. It's not a centralized order book. It basically, this is very much how energy markets used to and still work. You basically have buyers that come in and sellers that come in, and we're the central counterparty. So we show people what the prices are where they can buy and sell, and then we match buyers and sellers. And we operate most of it off of Telegram and Slack and other chat messengers. Soon we're going to migrate it to our front end platform as well. But basically people come to Luxor for price transparency. They say, where can I buy this? Where can I sell it? And we match people up.
And so I'm a seller because I have the ASICs.
Yep.
But the buyers are people who just think they read in the market better and want to essentially buy the upside that they think exists?
I mean, yes and no. Like we have what are called market makers in this. We have people that provide two-sided markets. Like any robust derivatives market, in every asset class will have market makers, and they'll be ones that are, below spot and above spot. So they'll be trying to buy it below and sell it above. And then they have different ways of, getting rid of that risk. And then, there are other natural buyers like hosting facilities have upside exposure. So they would be long hedging. Same with cloud miners. And then there's speculators. Most markets operate really well because of speculators. Like a lot of volume and liquidity comes from speculators. So people that think there's going to be a short-term spike in transaction fees, if you want to play against difficulty, if you have an opinion on Bitcoin, like these are all different ways that people get in.
And for every win, is it a case for every winner there's a loser? Is it like
no, not necessarily. So in this example, someone bought before the spike and sold at some point, right? And then they could have sold to someone who bought. They could have sold early and someone bought. Like it's not necessarily a winner and loser scenario. You can have two winners,
but you always win because you're just matching buyers and sellers.
Yeah, I mean, we essentially just get a brokerage fee for matching the buyers and sellers. We don't really take an opinion. We're just trying to facilitate the market.
And is it always a buyer? So, like, if I come to you and I say, I want certainty
at a price.
At a price, there's always a buyer.
Yeah, for sure.
And so, if I come to you, do I tell you the price I want, or you say this is a price I think I can get you? You go out and they say this is the price I've got you. How does it work?
It could be either. So let's say right now spot price is $62.
Yeah.
Okay, and you say I want to sell it at 64. I would tell you, well, the highest bid right now is say 58. So you could sell it right now at 58, or I could try and sell it to you at 64 and see if someone wants to take it.
Okay.
So I can work it for you, or I can just tell you where you could do it right away.
Okay.
And we do both.
Okay. And in some ways, if you're operating a good facility, if you're efficient, you can essentially hedge out the whole amount and go, at least I know for the next year, this is how much money I'm going to make and I'm good.
Oh yeah, totally. I mean, I keep going back to oil and gas, but I think there's a lot of tangents there. But there's businesses where they just sell production as soon as it's done. Right. So there's Bitcoin models for that too, right? If you're mining, you can just sell Bitcoin right off the bat. But yeah, you could hedge out your entire revenue if you like the level, and off you go.
And so what's the market saying, if I want to sell now and is it
Well,
optimistic or is it?
the truth is we're still playing the education game with the mining space, and
Okay.
they're always optimistic that things are going to be higher. So it's quite often that we hear,
Kill
"Oh, I don't want to
Bitcoiners."
hedge. I don't want to hedge at these levels," and I get that. But our activity has grown exponentially. Since we launched this in January, volume doubles almost every month. Actually, today's the 5th. Today was the biggest trade we've ever had, and so. It's growing, but it's still very much an education game.
And what are you giving up usually? About 10%?
It depends on duration. So
Okay.
let's say because there's not a ton of natural buyers, so there's a discount to spot that's inherent in the
Right.
market, right? If you're just trying to sell forward 1 month, 3%. If
Okay.
you get out to 12 months, you're in the 12 to 15% range.
Right. Okay.
Depends on how long you want to do it.
But as the market matures, there'll be more buyers, sellers. So
yeah, for sure. And we're seeing that already. Like as we get more and more market makers in the space, there's competition for price, and it's like any new market. It'll tighten.
Okay. So essentially, you can use it for multiple reasons, but if you want to secure money for capital, you can do that. But if you also you want a simple business, you want no stress,
Yeah.
you can do that. Yeah, I get it. That's
Yeah, I mean,
interesting.
it's like I said, it's not the sexiest thing in the world, but it's part of a big boy business, right? Like
Yeah.
you want to run a business, this is a good tool. We do have other tools. You asked me like what we have for everyone. If you're a miner and you're looking to get capital to grow your fleet, we have another tool for that as well, where it's not just a hedging instrument.
Okay, so interesting.
So I sent Danny over a copy of the September forward hash price curve, which shows kind of what you were talking about in more of a graphical form, how price trades in the future.
Yeah, I mean, the interesting thing about this curve, and for those that aren't able to see it, it's trading in what's called backwardization, which means it's an expected downward curve. And so the reason for that is because difficulty.
I was going to say this isn't necessarily spot price. This is an increase in hash rate coming up.
Yeah, exactly. Like, so you can basically model out X percent, call it 2% hash rate growth, right? On a regular basis. And if you treat Bitcoin as flat price, hash price goes down over time.
And hash rate continues to grow at a massive rate despite it being a tough market.
It's crazy. I was looking at this today because I figured this would come up, but in January, it was 260.
What are we, over 400 now?
415.
415, yeah.
It's doubled.
Yeah, well, that's bad math, but it's
Is
close.
it 260 to what? 260 to?
260
Yeah.
to 415.
Sorry, I thought you said 216.
Sorry, just giving you crap.
Yeah.
The
But it's still up, what's that, 80%?
It's up a lot.
Yeah.
It's up, and it's going to keep going for a while.
Another point that's somewhat interesting from this is how there's a difference between the BTC denominated hash price and the USD denominated hash price. Matt, do you want to explain why we think that might exist? Why this
difference?
why this natural market phenomenon occurs?
Because the dollar's inflating. It's a fucking shitcoin.
Well, actually, it's funny you say that because I was thinking about this recently. People ask me, so we have, going back to Nick's point, we have two instruments. So we have for hash price, we have USD denominated, which was very popular in the beginning. And then we have the BTC denominated hash price, which I don't know, maybe about 3 or 4 months ago, it switched in terms of how much volume goes through. So we do a lot more volume through the BTC denominated one. And like, it's just because it's a lot less volatile. I think people like to think in, native terms, and I don't know where you're going with the
it's just
question.
interesting to see. So what this chart would tell me is that we think that difficulty is going to increase faster than Bitcoin difficulty is going to increase faster than USD price.
Yeah, well, the reason for that in the chart, at least, is because we treat Bitcoin price as exogenous. So like it's just flat, right? It's like we're not making projections on Bitcoin. So what you're reading from this chart is that difficulty is going to cause BTC denominated hash price to go down.
Continue to go down, yeah.
It's an unstoppable trade, the hash rate. The way it keeps growing, fucking growing. I know come April next year, we may see a large downside, but at the moment,
the train will stop, but it'll start up again.
yeah.
So we see, I think right now, I don't think, I know that if the halving happened tomorrow, we would be at $31 a petahash.
Yeah.
And there are there are a lot of miners that would not be able to operate in those
So a
conditions.
literal halving.
Yep. So tomorrow, if we just went from $62 a petahash to 31,
Assuming Bitcoin stayed flat.
assuming Bitcoin stayed flat, there would be a lot of miners that would not be able to operate profitably in that environment. So they would see, we would see, I think, over the next 2 weeks, a pretty large difficulty adjustment downward.
So have you got a version of this chart that goes through to May?
No, I mean, I don't have one. Do you have one, Matt?
Actually, on Monday, I will.
Okay.
And so you're going to price in post-halving a big drop.
Yeah, but we have to make some assumptions. But yes,
Yeah.
I mean, I think we're projecting post-halving like 340. We're going to say that we're projecting that hash rate will be at like 450 come April, and then drop to like 20-25%.
Yeah.
And it won't halve because it's going to be a bloodbath, a battle.
Well, I mean,
A test of resilience.
it depends on how quickly. It depends on how long it lasts, I guess.
So we can look at the last halving and see that it didn't go down by half. The difficulty did not, which means that there are miners out there that are operating with enough margin that they're willing to operate in this new margin environment, even though it is half. But there are miners that are not going to continue to operate. They'll turn their machines off. And then there's also miners that are like, okay, I'll run unprofitably for a little while and draw from my bag to pay for this. So we saw that in the last halving over the summer of 2020. That was the lowest hash price environment that we had ever seen up till now. And it was actually quite bearish on Bitcoin price over that summer because miners, at least the theory, and I'm not sure if this is confirmed or not, but the theory was that miners are capitulating. They're basically living on borrowed time, selling out of their HODL, selling basically drawing from their balance sheet to reduce, to basically try to get through this trough. And, at the end, some of them made it and some of them didn't.
What's the logic to run machines at a loss when you can literally just switch them off? Is it more expensive to switch them off because you still got to pay for your energy?
That's a good question. I've asked that many times, and I don't know that there's like a one size fits all answer.
My assumption is like some of them, it's even though they're running a loss, they still got to pay for the energy, and so it's more of a loss. And so the others, it's like we need to run to squeeze out the competition who can't survive.
I think that's it. I think it's more the latter, personally, but I don't know.
So there are contracts called take or pay electrical contracts for power, which means you either take the energy or you're paying for it regardless. So in that case, say you have to take at $30, $30, and you're able to sell, you're only able to sell at 25. You're basically taking a $5 loss. But if you weren't mining, you would be taking a $30 loss.
Yeah,
so,
I mean, it's like you're running at a loss, but it'd be worse of a loss.
Yeah, it's a lossier loss.
It's a lossier loss.
It's a lossier
loss.
I
think that's the answer right there.
It's fucking brutal.
Yeah, miners are savages, man. Shout out to all the miners out there, by the way. They're savages.
It is a tough business. You guys are amazing.
Do you guys do any kind of thought or analysis into what does drive the Bitcoin price? Why every kind of 4 years we have had a bull run? Is it any shenanigans within the miners themselves? Are they large miners who know they can play this and squeeze people out and take their foot off the steam at the right time?
The last time we chatted, it was right after the China ban, right? And it was the best time to mine ever, basically. And what we saw, there was actually something that was really interesting. There was this thought. There had been a lot of people thinking that maybe there was some collusion amongst the Chinese mining pools because there had been sustained high transaction fees, and we're like, okay, who's using the chain? And then as soon as the Bitcoin miners in China turned off, those transaction fees pretty much dried up. And so in that way, maybe there was some collusion, but right now I don't think there is.
How would that collusion have an impact on Bitcoin price? That was your question, right?
Well, in terms of having some control on the liquid supply, yeah.
I don't see it. I don't understand how a miner, I would be curious what the theories are, but I don't understand how a group of miners could have control over a Bitcoin price.
I think influence, let's say.
I mean, all they're doing is releasing float, right? So I don't see how that would have an impact. I don't know. I don't see how they could have an impact on price. I think maybe the fact that it's a bunch of hodlers and, it's decreasing what's available to the open market, maybe. Like if no one's selling their Bitcoin.
But it's a bit weird. Every 4 years, it's the same. And I don't know if it's just that the design Satoshi has come up with here is a natural test of human instincts of fear and greed, and it works in a perfect 4-year cycle. I don't know. I don't know if it's related to election cycles. I don't know if it's got. I don't know, but it seems every 4 years.
It's usually after a halving, is it not?
Yeah, but I don't think it's got anything to do with the supply of the halving itself.
Not anymore. I think earlier maybe.
No.
So, like I said, over the course of the summer of 2020, that was a time when you could definitely convince me that there was a price depression because miners were capitulating a bag of Bitcoin that they had held for a long time. And that Bitcoin had not been in circulation for a long time. And then they were selling it to keep their operation afloat. And then as those miners finally, the ones that were at the marginal, I guess at the margin there, were forced out of the market, that then turned off that, like, what you would call I wouldn't say artificial selling, but like that sell pressure that comes from them liquidating their bag to then, kind of unleash the bull market, I guess.
I mean, I think
you could
a lot
convince
of
me of that a little bit, but I don't know if it's enough. I don't know if miners control enough Bitcoin for it to really have that much of a factor, at least not anymore.
I think it's a lot easier in this space to start a sustainable market just due to the fact that it's illiquid and prone to irrational exuberance.
Do you think this is going to be a particularly brutal halving, or is it just always a brutal halving? It was always brutal.
I mean,
Well,
2020
margins
was
are a lot
bad.
lower than they used to be, so
Yeah.
I think it'll be a bloodbath.
Okay.
2020 was bad. The thing that's different this time around is that energy prices are significantly higher. They have come down. The last time we chatted, it was right after the Russia-Ukraine conflict had occurred, and prices were at all-time highs, and that was what was causing. I get another one that had another huge miner that had gone bankrupt was Compute North that we didn't mention.
Yeah.
But that was, those power prices directly correlated to them going under. And we're going to still see that sustained power price is still out there. It's definitely not as high as it was this time last year. And maybe it continues to drop across the board. But that is one big difference between this halving and the last halving is, power prices are significantly higher across the board.
Speaking of energy prices, this is totally a tangent, but gas prices here in Santa Monica are insanity.
How much is gas?
It was like $6.65.
Laughs in English.
Do the math. What's that? 665 what? A gallon?
A gallon.
A gallon,
Is it 3.5
yeah.
litres in a gallon?
Huh?
Is it 3.5 litres in a
Oh,
gallon?
I don't know.
You look it up.
4 liters in a gallon, right?
How many liters in a gallon?
What's your
We're
unit?
gonna do some math for you.
Quid,
Richard.
Well, how do you guys measure gas over there?
3.75.
Quids in a stone or
Right,
something?
So what are you doing? You're dividing.
Well, I don't know the pricing of them right now.
Right. So how much is it?
It's
3 points.
here. It's $6.65 a gallon.
Okay. So divide that by the
Yeah.
3 point. And what have you got?
So it's $1.75.
A liter. So put that in pounds. Do you know what? It might be closer than it used to be.
I know. I was thinking that.
Yeah.
Quick,
£1.40.
£1.40. Now have a look at the price of petrol in the UK.
is
Higher?
pounds and quid, is that interchangeable?
Yeah.
Yes.
Okay.
But quid.
Do you know what? It's not as bad. It's like £1.58,
Okay.
£1.60.
Well, just to put it in perspective, it's sub $4 in Chicago.
Okay.
Yeah, but like we have a flat price across the UK pretty much. So you might pay a bit more in London or on a motorway, but it's about £1.54. So that's what, about $1.80. But like I've always been used to like hearing Americans complain about the price of gas and going, you got fucking no idea what
We
we
also
pay.
drive much bigger, inefficient cars than you do.
Well, not always, not
Yeah.
always. Yeah, so a quid is a single pound.
Quid is a single pound.
Yeah, so it's like lend us a quid. It's like give us £1.
Got it. Okay.
We don't say can I have. Well, you might say it's 10 quid, right?
Yeah.
But we don't use quids.
Quids. Okay,
Yeah, it's
not
not
quids.
plural.
Quid is naturally plural.
But
plural.
quids and pounds are interchangeable. But like quid is more of a term like lend us a quid, give us 10 quid.
Gotcha.
Would you do a half a quid or is it just 50
No.
pence?
No, it's 50 pence.
That's a hay pence.
but it's 50p.
It's 50p.
Yeah,
50p.
50p. Yeah.
Got it.
Wait, that
Or a tenner. Fiver.
Yeah. Well,
Ooh,
Nigel.
What's a Nigel?
It's a Nigel Ben.
I don't know.
So we have nicknames for him. So a five is a bluey.
Monkey.
Yeah, monkey is 50.
Yeah, I think so.
No, monkey's 500.
Is Monkey 20?
No, monkey's 500.
See, we don't even know.
Well,
This is
there's
great.
a name for that kind of language. What's it
It's
called?
Cockney rhyming slang
Yeah.
usually.
Yeah,
Bluey's
monkey's
a
500.
Yeah, Bluey's the fiver. Nigel's a tenner because Nigel Ben 10, the boxer. It's a score for 20.
Yeah.
Bullseye for 50. I don't know what 100 is, but a monkey's 500.
Already.
Bag of sand.
Already's 50 as well.
Is it?
You have $1,000 bill?
No, but it's like, it's just
Oh,
for the
okay,
amount of
okay,
domination.
okay.
1,000
Bag
quid.
of sand.
Yeah, 1,000 quids.
Bag of sand. We have lots of things.
I'm saying quids now every time I
Quids,
meet
yeah.
someone from England.
A few of them get used. Go for a gypsies. Let's go for just go for a wee. So gypsy's kiss is a piss. If you call somebody a Burke, you're calling them the C word because it's Berkeley Hunt.
Okay, got it.
Yeah.
Wow.
Just dropping a lot of knowledge here.
We do a whole podcast about this.
If you're wearing a
on
whistle,
linguist.
a whistle is a suit.
Okay.
Whistle and flute, a suit.
I had a cheap whistle last time I was here.
You did.
The YouTube commenters told me about
Yeah, but
it.
now you've not got it on. I think your business might be screwed.
I don't know.
See you in court
Never,
next year.
never read YouTube comments.
I saw SBF in a suit. It was not good. I was like, this is a bad idea. Bad strat.
Yeah, he's going to end up with a Nobel Prize.
Oh, geez. So yeah, I guess the FTX stuff was happening around the last time all this, miners were kind of unraveling this time last year. It was around, FTX was kind of,
It was a rough year last year.
That was a rough year.
I wonder
yeah.
if there was no FTX, no BlockFi,
Luna.
no Celsius, no Luna, no 3 Hours Capital. Anyone else I missed? There's a lot of downwards. I wonder how we would
I
have
think
done.
Genesis just stopped.
Yeah, Genesis.
My
Operation-
first day on this job was the Luna crash.
I wonder. My only assumption is that we would have gone higher, still come down, but come down to a higher point because we came down from higher.
Wait, you think we would have gone
Steeper
higher?
crash.
I think we would.
That leverage definitely drove price up.
Even though they didn't own any Bitcoin, they weren't actually buying any Bitcoin.
I think the froth in the market
Agreed.
drove that up. Yeah.
Yeah.
Interesting.
There,
But
there
you-
had to be a catalyst.
But we would have definitely seen a higher floor probably if there was not
Yeah.
that much leverage. But that's just the way the world works. That's how humanity has operated for 5,000 years
Well, I mean, you can't have a chart that looks like a hockey stick and expect it to continue.
to continue, unless it's Luxor firmware installs.
Exactly.
Just kidding.
So what's your feelings for next year?
Well, I'm kind of in line with a lot of the pubco miners right now have been pretty avid. They've been pretty adamant about it being a very bearish year, very tough year, very tough year for miners. And I share that. But I do think there are glimmers of hope. I think there are definitely places where miners that are thinking now, putting together these types of hedging strategies, squeezing out the extra efficiency, like, LuxOS is something that we've been pushing a lot recently.
What's that?
It's
growing smartly too.
That's
What-
a good.
what
yeah.
is LuxOS?
It's a firmware that goes on the mining machine. So that's basically the software that goes on the device, kind of like jailbreaking your iPhone.
Okay.
It unlocks a bunch of features and can improve performance and things like that you don't get with stock firmware. And so we've been spending a lot of time developing that, and that has been going gangbusters. I was actually just checking my phone. One of the co-founders, Guzman, is in Prague, and he's been installing for like the last 12 hours for customers.
So are you like bear market resistant then?
We have been. We've made it through we were built during the first bear market, the previous bear market. We were founded in August of 2017, which was kind of the beginning of the run.
Yeah. What were you, about 4,000 at that point?
Even lower, maybe.
Maybe lower. Yeah, but
Really?
we were founded
year?
around that time.
2017?
Have a
that?
look. I wanna see
2018?
how close
Yeah,
it was.
August 2017. But at that time, it was just me and Eddie kind of building an
Yeah.
altcoin pool as a hobby. And so got to watch 2018 effectively from the sidelines because we weren't really a company at that time. And then we're like, wow, we should really build this thing into a company, and then got to basically ride that thing all the way down to 2020
Yeah.
when we hired our first people in the end of 2020 outside of the founders.
How many people are you now?
Like 61, 62.
55.
What's that?
55.
That's based on the org. There are people we don't put on there.
Oh. I've been.
They're secret. There are secret weapons. They don't go on. So we have
That's impressive.
Our org chart is public. You can just go to the org.com and look at Luxor Tech's org chart. But there are a few people that we don't put on there. But
Did you get the price?
Well, for the whole of August, it was between 2.5 and 4.5.
So we're both right.
there you go. Nailed it.
Should have bet again. You had a million sats to ride.
I know that year very well. That was like my first proper year.
As a podcaster or as a
Was
big
a big no the
Oh
podcast.
no, you
was
were a
never-
miner first. That was a great story. All those S9s.
Yeah, no, not really.
It's a great
Not really.
story.
55.
Yeah, there it is.
And my Dragon Mints.
Oh yeah, those dragon mints. So no, you were saying what can how do I view the next year?
Yeah.
So folks that are hedging properly, have the right strategies in place, not just hash price, but I think hedging, being aware of energy markets. I think right now general consensus among miners is to run unhedged on the energy prices, but I think that may go away eventually. And the reason being is that prices have been coming down.
Well, I mean, if prices are coming down, now it's the time to for energy, at least. I mean, locking in PPAs or like hedging doesn't have to be using derivatives.
Locking in PPAs is really expensive, though. You have to provide a lot of capital. Miners don't have capital right now, so they're like, F it, I'm not doing it.
I'm so bullish, though.
Bullish on what?
Bitcoin.
I mean, you were bullish in 2017. You were bullish in 2020.
Have you met a Bitcoiner that's not bullish on Bitcoin?
No, but I've got like solid foundations to be bullish. Okay. So, firstly, just traveling a lot and going to markets where, yes, people want and need dollars, but there's a natural fit for Bitcoin. There's a natural, like Argentina, more so than Lebanon, Argentina, there was a natural fit.
So you mean more from like an adoption perspective?
Not just that, but also speaking, like we had David Marcus in here yesterday, and the stuff that Lightspark is doing is incredible. And that is stuff that uses Bitcoin to help people trade between countries.
Yeah.
You know, there's like this issue with like Africa, two African neighboring countries, neither wants its currency because they're terrible currencies, but they want to trade with each other. But they can use Bitcoin as the facilitator to sit between the both nations, and there's like high liquidity in Bitcoin. You know, so many tools like that are being built. And then you just have to look at what's going on with the state of various central banks, and I look in the UK, the levels of debt we have, and that's only increasing. Like, I'm so bullish. What I'm not bullish on is why people are missing it. Like that gap between what we know and then other people have heard of Bitcoin and they won't accept it.
I was thinking about this today, actually. I think part of the gap is it's not always intuitive. It's a kind of a barrier to entry from an educational standpoint on understanding Bitcoin. It's got negative media attention when people are just blasted with media constantly, and depending on what your medium is it's gonna if you're watching the wrong media, you're gonna be influenced negatively. And then to me, I don't know. I think there's not enough effort to educate the masses on Bitcoin. I think Bitcoiners love Bitcoin, and talking about Bitcoin to other Bitcoiners is great, but the general masses aren't getting the education. Even people that own Bitcoin, there's a lot of people that own Bitcoin just because they think it's going to go up and it's an investment tool, but they don't understand at all how it works. And I just don't think there's enough people talking about how it works and why it's accretive.
I'm having this kind of like back and forth moment with BlackRock. And I say BlackRock because really they'll lead the ETF game, right?
Yeah.
I know fundamentally it's not the right move for, I don't want to say Bitcoin, but Bitcoiners, the people who will buy, who really should just be buying spot Bitcoin and holding it, right?
Yeah.
I know ideally it's not the right thing. I also know like we can't really trust BlackRock, but I also wonder if that is the game changer. It's like the signal that gives Bitcoin, it like validates Bitcoin across so many different markets. And then it's that thing that sets us off to the races. And I wonder if that's what we need, is that becomes the signal.
There's a risk that it validates it as just purely a investment vehicle and nothing else.
That as well. But I just think if a BlackRock thing happens, it drives up the price, it drives up awareness, it causes some liquidity shocks. There will be a lot of media coverage. We know, yeah. And there'll be people searching about Bitcoin. All your friends who you told to buy 4 years ago will be calling you up. But I think there's been a shift in the media coverage. You say the negative media. I've actually started to notice positive media over the last year, like some really good stuff.
What are you watching, though?
I mean, it's different places, but I mean, we had the coverage in Forbes. Forbes have been pretty good over the last year. We've definitely seen a switch in some of the coverage in the mining.
Yeah, the ESG narrative seems to have cooled down a bit recently.
Yeah. And so it's a slow shift. It's not a massive shift, but the shift is there.
Yeah.
And I don't know. I just feel like maybe it's the signal we need. It's a weird one. I don't want it personally just for the number go up. I want it personally because I want this technology is available to as many people as possible.
Yeah. Well, a number go up draws attention anyway, but
yeah.
Is 27,000 a good price? I feel like it's a pretty good price. It's not terrible. I mean, miners probably think that it's bad, but it seems like pretty good.
I think relative to float, it's below fair value.
relative to float, it's below fair value. You're going to have to explain that for us non-derivatives pit trader people.
I think projections based off of how much Bitcoin actually exists right now versus what's going to be available later make the dollar value of Bitcoin low. It's operating lower than it should be.
Where do you think it should be?
And it's supposed to be in like the mid 30s, maybe low 40s.
Maybe that'll come.
So there is one big difference between the price that we have right now and the price action that we see and the overall, the macro event than we've ever had before, which is there's now a real return on cash, which has never really existed for the whole life of Bitcoin. You can park your cash in T-bills and get paid 5.5%.
Yeah.
That's a pretty damn good return. And now you like Bitcoin and all assets, not just Bitcoin, Apple and Amazon and ETH and everything has to compete with. There's now a real return on cash. And so there's a lot of people that are like, I'll take 5.5%. That's pretty good. It's below my mortgage rate. I'm basically making money, arbing that. And I'm just going to run with that. I'm not going to invest in other stuff.
Yeah, it's interesting you say that. So I was thinking about this today. Again, I think about a lot of things, apparently. Trading onions. You say 5.5%. Like a lot of people are comfortable with 5.5%. We have a product we're going to market with where we're trying to make it so people that hold Bitcoin can get yield on their Bitcoin in a legitimate fashion at like 10%, right? And so 10 to 13%. And, we're going on, we're kind of like testing this with, product market fit, talking to people, does this make sense? And
hey.
Should we have had a trigger warning?
Yeah.
Yeah.
You should have.
Oh, you don't like this idea?
Oh, I love the idea of getting 10% yield on my Bitcoin, but hey.
Well,
do you remember who used to sponsor this podcast?
Oh yeah. Well, look at that. Well, we're not sponsoring. We're actually doing
That's a good point.
Yet.
We'll talk about, so there's a reason why.
Hold on. Just
I want to. Yeah.
Well, let me just close out the point real quick. Like we've been talking to some people about it, and for some reason, people that are on the Bitcoin side that are trying to get yield on it are all fixated on 10%. Everyone's like, I need 10%. It has to be double digits. And you just said, a lot of people are comfortable with 5.5%. And I hear like we can do these interest rate trades where it's like 17%, and I just don't understand. Like, would you not be comfortable with 7% or 8% yield on your Bitcoin? Like, why is it 10?
So when you say yield on your Bitcoin, everybody that's listening to this podcast right now is thinking, BlockFi, all my money's gone. I'm poor.
We know how this plays out.
We know how this plays out.
You offer yield on the Bitcoin. You sponsor my podcast. 12 months later, you bust, and everyone blames me.
And so here's what happened. And so here's the reason. The reason this is actually different is because there is actual proof of work. There is demonstrable economic activity happening. You can monitor that there's actual like mining rewards being produced. You're just giving up some of the yield or some of the margin that you would produce from that mining yield to somebody that financed your operation. So that's why there's
a way to do this
actual
that
economic
isn't
activity.
Walk us through it.
Hit him, Matt.
Explain it like I'm Pete.
Yeah,
step by step.
I will. It's
I've got 10 Bitcoin.
It's quite simple actually. So all right, you have 10 Bitcoin.
I'm giving you my 10 Bitcoin. Give me I want
Okay, so you have 10 Bitcoin and you want to put it to work.
I want 0.7 Bitcoin back.
Right. You're tired of it just sitting there in cold storage and it's doing nothing, right? Okay. So that's what you have. And you want to get, let's say you want to get 10%.
Yeah.
Okay, on the other side, there's a miner, and he has, let's say in this scenario, he has 30 petahash, and he wants to sell that forward, right? He wants to get Bitcoin up front for future production on his mining operation.
Yep.
And the reason he wants to do that is because he doesn't want 15 to 18% from a financier. He doesn't want to issue equity to be dilutive. He just wants Bitcoin up front so he can buy more machines. And he wants to grow his operation in a non-dilutive way.
Why does he want the Bitcoin, not the dollars? Or does he not care?
He doesn't care. Like, maybe he has to convert the Bitcoin to dollars, or maybe he can fund his ASICs deals with Bitcoin. I don't know. Like, it doesn't matter.
Okay.
Bitcoin or dollars doesn't matter. But in this scenario, you have Bitcoin. So you give the Bitcoin up front, and what you're doing is you're getting his future production of hash rate starting day one. And let's say it's a 180-day contract. Okay, so every day you're getting his production. But what you're doing is he's selling it at a discount. So he's locking in a discounted hash price at 10%. And you're buying it cheaper. And then what you do, this is where it gets a little complicated, you use our cash settled instrument and you sell that hash price to hedge it. and you lock in that yield. So now you've bought it at a low price and sold it at a higher price that's 10% higher, and now you get 10% yield on your Bitcoin for 180 days, annualized.
Guaranteed.
Yeah, guaranteed.
Well,
Unless-
the
the
risk
risk is that Luxor goes under.
the risk is that Luxor goes under, but the reason Luxor would go under is because the miner stops producing hash rate.
Yeah, so
So there's collateralization requirements for when a miner, for how much a miner is able to sell, that sort of thing.
Yeah, actually, this is an important piece. I shouldn't have glossed over this. So the risk is with the miner, right? You're not the risk because you already gave me the Bitcoin. You're already fully collateralized.
Fully collateralized.
The miner, however, they have to deliver the hash rate. They have to do as much as they said they did, and then they have to weather all the operational risks that they have.
Okay.
Plus, there's also the flight risk. They could just pick up and point their hash rate elsewhere, not be on Luxor pool, and then, we're left holding the bag. But Luxor's job in this scenario is to de-risk the situation. So we'll take margin from the miner. We could do liens on their ASICs. We could have them overcommit hash rate and put it into escrow. There's a number of different ways we can do it. We could do it TradFi ways.
And you're doing due diligence on them as well.
That's where it starts. So we have very good information on the miners through the pool, right? So we know how much hash rate, how long they've been with us, what their uptime is, what their energy costs are. We've KYC'd them. So we have all the background, and we only deal with, A-rated miners in this scenario that we're very comfortable with.
In which geography?
What's that?
Is it like US?
US
only?
based now, yeah.
Actually, that's another good point. Like, from a credit or a risk profile, you don't want someone whose whole fleet is in one space, right? Because that adds operational risk. I mean, you can do it, but it adds risk. Ideally, they have geographical dispersion and redundancy, but that all goes into this risk modeling and how we handle it.
And could my loan be dispersed and distributed amongst a bunch of different miners that de-risks it?
For sure.
Okay.
It absolutely could be. Yeah. So we've been working on this. We've done 4 or 5 test trades on it. We're trying to go to market with it by the end of the month.
Okay. So
it looks
the
like
risk.
it does look like a loan, but the product is actually a buy and sell agreement.
It's a purchase and sale agreement. It's what's called a spot transaction. We're having full regulatory and legal review right now, so I can bore you with that. But it is it's definitely on the up and up, and it's just you see this in every commodity. It's just a forward sale, and all you're doing is you're putting up Bitcoin, you're getting future production from the miner, and it just comes at a 10% yield.
And the reason it's at 10% is because it's better than borrowing, because if they go out and try and borrow in
15 to 18%. Yeah, it's better. It's better for everyone.
Yeah.
And 10%, like it's not, I don't want to overpromise. It's not always going to be 10%. It's going to be based on what the market dictates.
Market, yeah.
But if the miner stops mining, what do? You call them up and say, "What the fuck are you doing?" Or do you go and take control of their ASICs and sell them off?
It depends on the use case, right? Like typically what we'll do is we'll withhold a certain percent of the upfront fee. Like, so if you give them 10 Bitcoin, we'll actually just give them 7. And then we'll use that 3 in case of interruptions. So we can just kind of step in if they're down because of a fire or weather or whatever. We use that 30% to kind of keep making you whole and getting you your payments. And if shit hits the fan, we step in and, we're the one that guarantees it.
I mean, if you can make this work and it does work, you're going to have is an oversupply of people willing to loan Bitcoin. It's exactly what happened with BlockFi, Celsius. There was a massive oversupply of people with Bitcoin sat there in cold wallets who wanted to get an upside, and in the end, there wasn't enough borrowers.
Right.
That's why the prices got forced down so much.
I think that's good for the mining space because they're going to get much better. But yeah, I mean, you're right. There's going to be competition for this, 100%. But
I mean, my thing is like, how risky is this product for Luxor as a fucking solid business?
So the big blowups in the last cycle, with folks that took big mining loans, they were taking loans to buy future machines. And so all of the miners that went bankrupt or had any sort of missteps along the way, taking on debt to buy machines in the future, that's incredibly risky because you're taking on a big, not just operational risk, you're now taking like delivery risk too. So you have and in mining, you'll know that hash rate that's online is much more valuable than hash rate that's going to come online, because hash rate that's going to come online still needs to be manufactured, shipped from China, delivered on the right time, plugged in. You need to have all your power and transformers. All of that stuff has to line up, which is significantly more complex. In this case, we're going to miners that have already overcome all of that complexity and have machines up and running already. Once you have the machines up and running, the risk is much, much lower. But
that's actually a really good point. Like typically, going back to how we evaluate the miners, so the miners that we're dealing with, not always, but 99% of the time will be people that already have hash rate online. We can see how it's performing and see what their uptime percentage is over time. So if they're selling, 100 petahash forward, the expectation is they already have 100 or 200 or 300. And so
yep. Absolutely.
We're just helping them grow.
Is it one of those things that works in a bear market and then there's potential overexuberance during a bull market? Because it feels like there's this 1 year period that everyone blows up because it's like, oh, this bull market's different. Price is going here. I can do this. And people just get over leveraged and screw every single fucking time.
Right.
Like your product, as great as it might be, is going to introduce some leverage into the market.
Right.
And is that lots of miners are suddenly thinking, look, the price is good, let's go and borrow. And then, the bull market isn't as big as everyone hopes. It doesn't last as long. We get some blow-ups that you guys are left holding the bag for.
Especially if you're taking some collateral in ASICs, which has clearly not worked in the last cycle.
Yeah.
No, and to be honest, like we want to avoid that as much as possible. Like we do, I think in scenarios you'll put liens on the ASIC or take ASICs as collateral. But yes, you're right. It's a shitty way of modeling it out.
Well, and also it's a shitty way because the prices of ASICs is volatile, and people,
totally.
X19 Pro is worth 11,000 now. It's suddenly worth 1,500.
1,500,
yeah.
I mean, if you
and
can
no one wants to fucking buy them.
Right.
If you can do, I mean,
they do actually. We're selling a lot of them, but yeah.
If you could do it right, there's a lot of the reason it's hard with the ASICs is you have to go through the default and getting those and then getting them plugged in and all that kind of stuff is a pain in the ass. But to do it right, if you had a deal or owned your own hosting facility and you were in charge of where the ASICs are, it would become much easier to do.
Even less risky, right? Yeah. I mean, taking out the delivery portion, which is what caused a lot of the turmoil in the mining. It's called MiFi, miner financing market in 2021. Taking out the delivery component is a really big factor because you write these contracts. So here's an example: the biggest mining manufacturer is Bitmain. They would say, "Oh yeah, we're going to ship in December," and so you would write contracts where the loans would start in December. They would issue the payments. The first, and then they would say, okay, we're gonna have the machines online by March, and in March you start your first payment. Okay, so that to pay back the loan. Well, Bitmain or whoever, I shouldn't call it just Bitmain, but whoever has production issues or things are delayed or for whatever reason, the machines don't show up until March. Now it takes you 3 months to get online fully, and you're now 6 months behind on payments and so that causes a lot of disruption.
Yeah, I mean, the difference here is you have to have the hash rate already, and you have to make payments starting day one, and your payments are coming from the hash rate itself.
By the pool,
through the pool, but from your ASICs.
So it's I'm not saying so. It's not a 0% risk.
But nothing is.
Anything that generates yield has some inherent risk.
But the truth
obviously
is,
trying to reduce that risk, but there is still risk, certainly.
I think what separates this product is the ability to hedge your revenue risk from the miner. So you could be, if you're a miner selling your hash rate forward, you could use our cash settled instrument and de-risk yourself from a revenue perspective and de-risk your exposure to difficulty and transaction fees. And that makes, nothing's perfect, right? But it's a lot less risky than what we've seen previously.
It's very interesting.
It's going to be a very interesting the next year is going to be really, really interesting. There's a bunch of products that Matt hasn't mentioned and is not able to, I don't know if one of them you can't mention, but coming up in 2024, which are going to be super exciting. And I think it's going to be
2023.
Yeah, well, we have more in 23. I don't know if you want to get into the energy hedging structured products or anything like that. I find that to be probably one of the most interesting things, especially for scaled miners, is where you build a full a full hedging strategy for somebody that includes hedging the HODL. Somebody say has 10,000 Bitcoin on their balance sheet. They buy energy in ERCOT and they produce 10 exahash. Build them a hedging strategy that comes together over the course of, say, 2 years, and implement that. And basically, that's all of your hedging, all of your inputs, energy costs, all of your outputs, which is your hash price, and then also everything that you make in between, which is your HODL, your market, your balance sheet.
Yeah, I mean, what miners need is a one-stop shop to hedge out all the risks, right? You have your treasury risk, your energy risk, and your revenue risk. And right now, there's limited tools for your revenue risk. We're one of the few, although I think that market's growing. And then
It certainly is, yeah.
Yeah, and then energy, energy is tricky, right? Because it's on a use case basis, like where your region is, what your energy source is, that sort of stuff. But I just don't think people have the expertise, and they're either hiring it or they're outsourcing it. And I think Luxor would be, one of the outsource components of that.
So everything's just really maturing then.
Yeah, as it should.
Yeah.
Yeah.
Into hopefully a longer term, more stable market.
Yeah, but
which we all want.
Yeah, but I mean, you have to remember, like this. When did the mining space really start? What is this? It's been
when did we have our first
7 years?
Yeah, I was going to say maybe our first pubco would have been,
I mean, it's not 2009, right? It's like 2014.
Yeah, 14 or 15 when we started, I think large deployments of S9s was one of the first.
Yeah, it's 9 years. It's a 9-year-old industry. And it's grown rapidly. It's got a few more steps to make, but to your point, I think it's headed in the right direction.
It's a lot of opportunity for you guys.
I think so.
How much competition do you actually have in this market?
Well, before we jump into that, I'm just thinking again about the yield product and how I know that as soon as you say the word yield, Bitcoiners, the Bitcoiner in me is like, nope, not happening. Not happening. Yeah. I have a personal friend who lent money to Cred, one of the lenders, just like BlockFi, but smaller one, and they tried to claw back a payment that they got from him, or that his loan was over. They tried to claw it back because they said after they went bankrupt that he got preferential liquidation. So like I'm very familiar, and it was a lot. It was a lot of Bitcoin. It was like his net worth of Bitcoin. And so anyway, the reason I'm calling out that yield is a thing, but it doesn't have to be such a bad word. It is a bad word in our space because it blew up so many things. But yield exists out in the world. Yield exists on treasury bills. Yield exists.
Nick Carter says you can't get away from this, right?
I don't know.
Yeah, I mean, you're not going to get away from this.
Yield exists. It's the time value of money.
It's not a scary thing. Like it's a time tested instrument, not ours, but like generating yield on an asset is not novel.
People have made interest payments for
it's just painful in this industry
decades.
Because of recent events.
Yes.
And people doing stupid fucking shit like lending 900 million based on FTT tokens as collateral. I mean,
but there is a real difference. So this is a completely finite asset. Is there any other that's as finite as Bitcoin?
No.
So does that not add an element of risk?
Why would that add an element of risk?
Because there's no increasing supply that you can pull forward.
Oh, I mean,
it's a good point. So you could analog
that.
gold.
I mean, we're a long way away from that point, right?
In what sense?
Well, I mean, you're saying it's finite in that there's only 21 million Bitcoin?
Yeah.
I don't think that, I mean, money changes hands, right? Even if it's a finite amount. And so yield is yield. Like, it's not like we're not producing more Bitcoin. We're just getting yield for the person that has the Bitcoin.
I think the most interesting part of this is if you create this product and the risk exists between the borrower and lender and it can't take you guys under. The things that happen with BlockFi and Celsius is the decisions they made where they made massive multi-$100 million loans that went south and it took down the whole company, right?
So,
if you connect me with a borrower and and they screw up and it's my loss and it has zero impact on your company, I feel more reassured by that. But if you're in that middle position where you can get taken down by one bad decision, that's the shit that scares me.
No, and as it should. And that's where you as the person who's trying to get yield has to do your due diligence on us and what techniques that we're using to de-risk the seller,
Nick's my boy. I just
So
trust him.
here's this. So we talked about all the different methodologies that we have for reducing risk from the seller being the miner, doing diligence on the site, taking a lien on the machines, having them on the pool, having some sort of history where we can go see like, yes, this person has produced 100 petahash for 3 years or whatever the criteria happens to be. There's another thing that we can introduce, which is basically we can have somebody come in and underwrite and basically write a performance bond, which takes the risk off of us and puts it on somebody else that has a relationship. So say there's some miner that we don't have a relationship with, but somebody's lent them money in the past and they've done well with the loan and they made them whole and they held up their end of the bargain and they're like, yep, I will write a performance bond for that miner. They probably make some money from the miner for doing so, but then they take the risk off of us and that goes then on to the underwriter of that performance bond. And that would be the way that ultimately we won't be the ones on the hook for the whole portfolio.
Yeah, that's exactly right. And that's how you do it at scale. And this exists in the energy world already. PPAs are backed by performance bonds. Miners should be very familiar with performance bonds. So to your point, like if you're doing it at scale to the size that would take down a company, you absolutely would want to do something like a performance bond.
I like it. Take my Bitcoin.
I did think more about your question though. And I think I understood. I misspoke. I think you're saying we do actually produce Bitcoin through this because the miners producing Bitcoin through their hash rate that they're selling forward. So I think eventually it would become unprofitable for them as the halvings keep occurring, but that's pretty far away.
So, and then you're going to say, well, what happens in 2140? And then
I don't care, man. I'm going to be on a beach.
And then we talk
2140.
We talk about transaction.
Shit, I might even be alive.
We talk about transaction fees at that point should have taken up the slack for the Coinbase subsidy. And if they haven't, then
when does that happen?
2140.
Yeah.
Okay. That's when
transaction fees to overtake.
That's when Coinbase reward goes to zero.
Okay.
We go from 1 Satoshi per block to 0.
Okay.
We're all very dead at that point.
We're all very dead.
When do transaction fees become more than the?
Well,
happened this year. There you go.
May of 2023.
Yeah, that's fair.
I think that's the first time that's ever happened.
Is there a chart where we can see the percentage?
Yeah, we have it down there, a little further down. That was a big one. Percent. So then you can go to 1 year here. Yeah, click us over to a year.
I want to see all.
Oh, so we didn't actually even make it quite to 100%. I think the only other time that we got close was 2017. You remember that winter of 2017?
Yeah, it's $50.
Well, I thought we got one block reward where it was 12.5.
Yeah, but I think this is the daily average.
Oh.
This is the daily average.
So we can only get a year.
Yeah.
Oh, great.
In fairness, it feels...
Found a bug.
Bug testing and pro.
It's almost fairly consistent. It looks like it might be slightly up.
The floor is higher.
The floor is certainly higher, and that's due to ordinals, which I don't know if we have time to even talk about. But
yeah, you've tried to ordinal pill me for a while. I never got my wizard.
Do you want to get into that right now?
I thought they were all gone. I thought all the wizards were gone.
Dude, the Wizard Council can come in.
I want my wizard without giving support for ordinals. I just want
Why
my
do you
wizard.
want it?
Because I want my wizard.
I've told him.
He told me at one point, he said, my wizard will make me rich. What
That's
do you
why
tell
you
me?
want it.
I said something about your net worth would be 100% wizard.
Yeah.
I don't know.
I think we'll save ordinals for another time.
Another time, yeah.
I can tease out some of the things we're thinking about if you'd like.
Why? If you're ready.
Yeah, there's some logical next steps for us. So we've launched this cash settle instrument, both USD and BTC. We're working on this yield instrument, which honestly we're very excited about. And
when will that be ready?
I would say end of this month.
Oh shit, soon.
Soon. We have a few items left to button up, but we're pretty close.
And how deep's the market for that?
On which side?
Both. Well, I mean, more the borrowers. You're going to have enough lenders.
It's in the exahash conversation on the sell side, and there's hundreds of millions on the buy side.
I'm telling you,
in notional.
I'm telling you that whilst there'll be some PTSD in the market, people want yield. They just still want yield.
Yeah, it's the golden ticket, right?
You're usually more reserved than I am.
Yeah, there's no way I'd use it. like too much PTSD. I mean, I've never used a yield product. I'm going to self-custody my Bitcoin, and that's like totally fine with me.
I get it. There's going to be people like that for sure.
Yeah, it pussies everywhere.
I mean, to me,
The pussies will be the only ones left with Bitcoin at the end of the day.
Fucking, you have negative yield just betting me all the time.
I wouldn't. What I said to you is accurate, and I would advise this to anyone. Like, don't take my word for it. Come do your due diligence on us and how we de-risk this, because you should do that in anything that you're investing in.
Nick, this product cool?
Yes.
Yeah, my due diligence is done.
Okay. Didn't work for you though.
No. Look. What I'm saying is, I still think there is PTSD.
Yeah, of course.
But at some point, I think somebody's going to solve this somehow, and I think there will be a deep market of lenders for this. The big fear is companies going to shit. That's the one you don't want.
Well,
like loans go south. Loans, there's a bad loan percentage everywhere.
Yeah.
And if that's priced in, that's fine. But it's lending 800 million with FTT as collateral. That's the kind of bullshit that took people down.
Well, yeah, and it comes down to how do you credit profile, how do you manage risk, and how do you de-risk these opportunities, and that's where we're focused. So, like for us, we don't want to go under. So,
but Zach Prince didn't want BlockFi to go under.
Yeah, but like a lot of the reason these companies went under is because they made stupid irrational decisions.
Yeah.
So we've learned those lessons, and we want to do it differently. And I would like to keep this job and not make Nick go under
and go to jail or whatever. But we have a lot of
you might get a book made about you.
Ooh, that book is spicy. We also have other business lines, which is kind of interesting. We have like a diversified stream. Like derivatives right now is like a very small sliver of the whole ecosystem at Luxor. So, which is great, and we want it to grow. But we have other business lines that generate revenue, and we're a diversified company at this point.
We actually have a great story around that just from today. That trade I was telling you about, the biggest one we did. So it was one of these trades, the yield instrument, where we basically were able to give a miner Bitcoin up front to purchase ASICs through our brokerage team. And then ideally they're going to install LuxOS, the firmware, and then join our mining pool. So that one deal alone touched derivatives, ASIC brokerage, mining pool, and firmware.
Wow.
The quadfecta.
The quadfecta.
We just need him to do an ordinal hub mint or something, and then get the whole thing. Yeah, get a wizard.
Yeah, but for us, the rest of the year and into next year, we look at other products. We want to do BTC denominated energy products. We want to look at.
Oh, that's wild. I know we're in 2 hours. We're in 2 hours at this point.
You can go as long as you want. Honestly, you support my football team. I'd give you.
We've got energy denominated Bitcoin denominated energy products is
BTC yield per megawatt hour.
It's hard to even conceptualize, but maybe Matt, I don't know if you can hit it, Matt.
I can hit it. I want to keep talking about the other stuff we're doing.
Okay, go.
We want to do hash price futures. We want to do hash price options. Like we want to hit all of it. To the question you made earlier, we want to have tools for everyone to either get exposure to this space, to hedge their risk, or honestly, to speculate on these markets as well.
It's impressive, man. Well done. It's really very cool.
Thank you.
I don't understand a lot of it, but the bits I understand seem very cool. You're helping mature the market, flattening the curve, hopefully some people, and taking risk out, which I think is really good.
Yeah.
Transferring risk is important. Being able to move risk from one area to another, that's basically what you do whenever you do any of these hedging operations. You're moving risk from one person to another. That helps flatten the curve.
Should we abolish the Fed?
Ooh, here we go.
Yeah.
I'm going to say yes, just because I'm going to change my answer this time. We should definitely abolish the Fed. I'm going on record. Let's get rid of it.
We'll tell Marty.
Yeah, tell Marty.
Luxor.tech, people. Check out my boy Nick's website and his company. And anything else you want to send people to?
Luxor.tech, hashrateindex.com, which we've been looking at the whole time. So appreciate that, Danny. Ordinalhub.com.
Derivatives.
Follow us on Twitter at Luxor Tech Team.
Impressive.
At #_Bender at Trading Onions.
At Trading Onions.
That's a great handle, though. It took me forever to find you.
Yeah, I'm not as active on Twitter as I should be.
Not a Twitter guy.
I'm a bit quiet. on Twitter.
Well, thank you for having us, by the way. Appreciate
Anytime,
it.
man. Like
This is
whenever.
awesome.
We seem to do it annually, but you can come
Yeah.
on whenever. You got stories to tell us. Tell us. We'll do it.
October, November. That seems to be the
April,
time.
April in Bedford. You coming to the cheat code?
Hang on, hit me. What's this?
So we got a conference in Bedford,
Okay.
12th and 13th of April next year. So we ran a small test last year. It worked. We're going to go up to 1,000 people. We are purposely creating content that doesn't have Bitcoin in the title. So we're calling it cheat code. For me, my thing at the moment, Bitcoin is a cheat code. If you adopt that into your business, if you're a non-traditional business, you've opened yourself up to an audience of whatever, tens of millions around the world, or people locally who I think trust you a bit more because you're a Bitcoiner. And so like the football team used the Bitcoin cheat code, and we won the league last year in a cup double. We're going to win the league this year. Our girls are top of the division because we're a small local team, but we have thousands of fans around the world buying our merch, flying in, come to the game. So the conference called Cheat Code. First day, normal conference. We've got amazing speakers. I'll tell you afterwards.
No, this will go out after we've announced.
So like our keynotes are Lynn Alden, Alex Gladstein. We've got Natalie Smolensky. Hopefully Harry. We're trying to get Harry in.
Yeah.
Obi,
Howard
American
Farrington.
Hoddle, Jeff Booth, Constantine Kissin. Hopefully Majid Nawaz. Like it's a good set.
Tell me where
Hold on.
Bedford. Oh, sorry.
Hold
I
on.
apologize.
That's day one. Day two, we take everyone down to McMullen Park. We have a barbecue. We have our last game of the season for our football team. And then we have a massive piss up. And so because every conference is the same, right? You turn up and it's 2 days of talks. But the second day, no one wants to go because they get hammered the first night. So
Yeah.
we're saying we're getting rid of that second day and we're having a football match instead. And everyone will come down and get drunk and eat burgers and watch football.
American Huddle's leaving America for the first time.
Yeah. And
No way.
And so we did it last year. We had 150 people. It totally worked. Everyone had an amazing time. So we're expanding. And it's at the Bedford Corn Exchange, where they originally traded corn in Bedford.
What?
And yeah, 2 days. Come along. You
Why
know
not?
you're
I'm
coming.
in now.
Derivatives team building
Yeah.
event.
You
You
know
just-
you're coming. It's going to be awesome. So
Wait, when is the derivative or not the halving slated
April.
to occur?
It might
April 24th, according to your
It
website.
might
yeah.
be. It might be.
It's the 24th.
So it's going to be after ours.
How quickly could that, is it possible to take 10 days off that between now
I
and
don't
April?
think so.
I don't know
much.
if we could do it now. It would be tough. I think.
If anything, the opposite.
No, I don't
No.
think we would.
No?
It would. Okay, it would fully depend on Bitcoin price. If Bitcoin ripped, there would 100% be an acceleration of that. I don't know. I still don't know if we'd get to 12.
10 days
but-
is a lot, or
Yeah,
12 days.
but especially in just a short period of
Just
time.
need BlackRock to get approved early.
Yeah.
Yeah, but if we went to 10K, oh yeah, it would be like June.
You know you're coming to Bedford.
I'm going to come to Bedford. I'm trying to think of where, like, I have this like group of miners that I will not name any names, but I have a group of miners that are like close, trusted friends that I think about a lot. And we're trying to figure out where's a good place to have a halving party for miners. Like this is like that within the blink of an eye, all of our revenue is going to go down by 50%. And we should be in one place,
West
getting
Texas.
drunk and doing it together. Where should we be?
Somewhere cheap.
Or Ireland. Ireland. You got to go to fucking Ireland.
Yeah, that's
Yeah.
a good shout.
Ireland is the best place to drink in the world. Period.
Just like rent out the Guinness
no
factory.
Galway in Ireland. I'm telling you, there's no. If you go to Galway in Ireland, you know, you could have the hash price halve, and then the price crash down to $2 a Bitcoin. No one buys it. Every government bans it, and you're still gonna have the best time ever.
Best day ever.
Galway is freaking amazing.
We were thinking something like the Bahamas because of FTX, which is kind of funny. Of course, El Salvador is on the list, but as much as people try to tell me El Salvador's safe, it does not seem that safe yet.
Dude, I got this done in a gang zone. I was fine.
Yeah, okay.
I mean, at
you're,
3 armed
you're really
guards.
you're really selling it. Yeah. At
Elsie
3 armed
looking
guards.
tattoo. Can I ask a stupid question?
Of course, there's no stupid questions.
From a geography perspective, where is Bedford?
So if you land in London,
Yeah.
you get on the train. It's 40 minutes north.
Okay.
Or if you get up, sure. Or you can jump. You can drive. It's about an hour and a half because of traffic. It's easy. It's close to.
Because I lived in London for a short period of time, and I kept hearing about Bedford, but I didn't know where
Really?
it was. Yeah.
No,
I don't know if it was just because like the trains.
You might have heard of Bradford. Oh yeah, the train goes through Bedford. So if you go fully out, Danny, so they can like
Oh,
perspective
it's
for
not
the
too
country.
far from Luton.
Yeah, like
Okay.
there you
Hang
go.
on a sec.
So
We
it's,
got
all right.
Yeah.
Northampton. I'm actually wearing a pair of shoes called Crown Northamptons. They're made
Nice.
right there in Northampton.
I used to skateboard there as a kid at Radlands,
Okay.
and then go to the Netto and get.
So you said 40 minutes?
Yeah, it's 40 minutes on the train from London to Bedford.
Okay. But you could just fly into Luton. And
Yeah, you fly into
right there.
Luton. Yeah, but you can't fly for the US to Luton.
No, you'd have to fly to
somewhere in Europe
yeah.
first. But you'd fly to Heathrow. If you came in, I'd just come pick you up. But yeah, you'll have a good time. It's
Okay.
It's going to be fun.
You had me at Corn Exchange.
Corn exchange, yeah.
Corn exchange. Guys,
It's
well
been
done.
good. It's
Thank
been
you.
good. I
Love
appreciate
this.
it.
Appreciate
Thank
you.